everybody, happy Sunday and welcome to episode 3 of the Stock Trading Pit Season 4. In today's episode, we have 4 segments to go over. Segment 1 is going to be Talking with Traders with Dan and guest Blamey, founder of King Street Trading. Segment 2 is going to be the Broad Market Review, going over the broad market ETFs and some crypto charts into the week ahead. Segment 3 is going to be the Watchlist with our guest Tanner Cummings, aka ChartingOptions on Twitter, and myself. And segment 4 is going to be the weekend chart request segment, going over some individual names into the week ahead that you guys requested on Twitter. So everybody sit back, relax, and let's jump right into it.
Welcome to another segment of Talking with Traders, where we get to know the people behind the trades. In this segment, I've got a really interesting brand new first-time guest to the program, Blamey from King Street Trading. Blamey, thank you for being here.
Hey, thank you so much for having me. It's a really nice opportunity to come on.
Absolutely. I think you have a lot of great knowledge, and you know, a lot of the people watching can learn a lot from you. So let's dive right in. First question I usually ask everybody who comes on is, how'd you get into trading? So maybe we can start there.
Yeah, absolutely. Well, honestly, it started off pretty young age. Not that I started trading at a very young age, but my uncle was always an avid investor, so he was just always talking about it, and just kind of it was just around me a lot. So I was interested then, and I started investing throughout high school, just on the side a little bit. And then as soon as I got out of high school, I started taking it a lot more seriously and developed my trading styles over the year to supplement different strategies. So that's about it.
So you mentioned, you know, you developed your trading style. Let's talk about that. How would you describe your trading style? Are you a swing trader? Are you a scalper? Do you use options or equities? Tell us a little about that.
Right. Okay. Yeah. So, I try to just adhere to how the market's behaving and just capitalize on those trends. So last year I was heavily, swing trading equities, short time frames, 2 weeks to a month. I'd say I'm also the swings that I do hold longer. I'm a position trader as well. So if I do like a company's technicals and, of the stock and the fundamentals of the company, I will hold that until the peak, until we hit the peak of those trends. And sometimes I'll, keep a core position and invest in it as well. But what I've been doing a lot recently is day trading with option contracts. And I just utilize those for really small moves, using less capital, less exposure, but also maximizing those gains.
How do you decide when a trade is going to become a investment, right? Is it always about the company's fundamentals, or do you take technicals into account there as well?
Well, for me, like the technicals will give me the entry, and
Okay.
I'll also be, even if I'm interested in investing in the company, I'll still be taking my profit as I go up with it. But what I do is I leave that core position in it if the fundamentals are what I'm looking for. So if it's profitable, or if I see a promising growth in that company, I'll keep that long term. Otherwise, I just adhere to the technicals of the chart.
Okay. How do you? I'm just curious because when you're talking about different styles of trading, you know how some traders will start out trading something, it'll go against them, and then they'll become an investor,
Yeah.
right?
Yeah.
I always found that a funny dichotomy, kind of a human psychology thing.
Yeah.
So I'm curious, how do you manage risk? Do you do hard stops? Do you use a technical indicator to get you out of things? What's your approach to risk?
Yeah, a lot of the time I'm using hard stops. So it depends. If I'm looking at my entry point and I think that I'm going to be scaling in, averaging down, hardly I'll ever take those trades. But if that's the approach that I'm going for, I won't use a stop loss. But if, for the most part, when I'm taking a swing trade, I want to average up on my trade. So I will set a hard stop around, 10 to maximum 20%, really depends. But usually around the 10 to 15% range, I have a stop on my equities.
Okay.
Yeah.
I've always struggled personally with hard stops because I find myself getting wicked out a lot, right?
Yeah.
Do you have any rules around how you manage stops? For example, one of my rules is if I get a stop, right, I'll wait till closer to close before I get out because a lot of times it will come back and you'll have a big lower wick. Do you do anything like that, or how do you think about it?
For me, if I'm gonna stop out of a position, I'll be looking at my next level of entry point, and I just try and keep it emotion free. So if I do get stopped out, I just take a step back from that position and I reevaluate the chart, reevaluate where I entered, and then I'll go and look for a potential repositioning. If I do
Okay.
get kicked out, obviously my stop was too tight and my entry was too high. So I just let those stops, teach me a little bit every time. Um, but again, as I said, if I'm going to be scaling into a position averaging down, I won't use a stop loss because I'm not going to average down on every 5 or 10% dip. It depends on, if I'm trading a mid cap, large cap company versus a small cap, you're going to see these small caps, micro caps, they drop in pre-market all the time if you're in them. So those are the types of positions you make sure that you're scaling in so you have a small starter position if you're trading something that often drops on you like that. So you have your small starters and you leave a looser stop, maybe you use a mental stop on those small caps, right? And then you have to understand that averaging down is going to be a lot riskier. But if that's your approach, you probably shouldn't be having a hard stop on your position. And you should really just make sure you're not averaging down on every single 10% drop. You really want to target your entry and your ad, you know.
Got it. That's a theme that comes up a lot. When I do these interviews, right? A lot of experienced traders or people who are profitable and know what they're doing talk a lot about averaging up, and you almost never hear about averaging down because I
Yeah.
think a lot of rookies average down and end up getting destroyed that way. How do
Yeah,
you
that's
deal with the psychology of that? Like
sorry.
averaging up is hard. How do you deal with the psychology of averaging up? I always find it difficult personally to do it.
Well, for me, if I'm looking to build my position, I want to know that my trade is going my way already. I don't want to be adding into something that's already working against me. So for me, when I'm averaging up, that's a good sign. It means that, you know, you're approaching the trade the right way. You had your entry in a good spot. Um, the more capital you put into a position as it's following the trend that you are anticipating, that's where you're going to make more money. But if you're putting more money into a position when it's going against the trend that you were anticipating, at that point you're gambling. So for me, it's really, do I want to be gambling or do I want to follow my plan that is going to allow me to capitalize?
Got it. For those watching, you heard it again, right? You hear it all the time on here. Plan to trade, trade to plan.
Yeah.
Um, try not to get emotional, right? Yeah,
Yeah.
I feel like every bad decision I've made my whole life has been an emotional decision.
100%.
So
It's always emotions. When you're reading the chart, you're reading other people's emotions on that chart. So everything you do in trading is it's a mental game for sure.
absolutely. What indicators do you tend to use?
I try to keep it really simple. I'll alternate depending on what I'm doing. So right now I'm day trading SPY, like I said, on the daily. So when I'm day trading, I'm just using Bollinger Bands. I use Bollinger Bands because it's centered around a short-term moving average, the 20 SMA. And
Hmm.
so that works really well when you're looking at these intraday charts to give you a short-term weighted average. And then I'm also using the 9 EMA with those Bollinger Bands. I use
Okay.
RSI. It's not something I live and die by. It's just an added, benefit. And I use volume. Really what I'm looking at is the volume. I'm watching 9 EMA, how it's interacting with the mid band, which is the 20 SMA on the Bollinger Bands, right? And I'm opening up those aggregation periods for scalping, day trading. I'm using a 5-day, 15-minute up to 1 minute. I'm using a lot of the 1 minute charts with these studies, and then also the 3-minute and the 6-minute are those aggregation periods that I really like to use for scalping. When I am swing trading, I'm gonna pull up just to give me a better idea of the direction or of the stock at the time. I'll pull up the 200 SMA and the 50 SMA as well with my Bollinger Bands. I'll remove the 9 EMA because I'm looking at more of a long trade, something I'm going to be holding more than just a few minutes or an hour.
Okay.
Yeah.
Do you when you use RSI, I'm just curious, are you looking for divergences or more just if it's heading up or heading down?
When I'm looking at RSI, I'm just looking, for whether it's extremely overbought on, the longer aggregation periods, or whether it's, centered in the middle. Because if you're in the middle of that RSI, you have a lot of range you can move in. But if you're at the top on if you're extremely overbought on a longer aggregation period, that's going to give you a good idea of just how extended it is. So I'm not focusing too much on the divergence, which is, when RSI continues going up and the stock's going down, it's a bit hard for me to identify every single time. So I just try to focus on, keeping it really simple with those and just what works for me. I think that's really one of the most important things is figuring out what does work for you mentally, because everything is a mental game. And if you can't capitalize off using certain indicators, you should never try and force it or anything like that.
Yeah, that's another thing that comes up a lot. The more experienced a trader that I interview, the more often they say they keep it very simple. And the more novice or new a trader tends to is to the markets, the more indicators and the more stuff you see on their charts.
Yeah,
I think that causes a lot of noise, right? Which is
absolutely.
distracting, right?
For me,
Because
I use I use these simple indicators just because they're some of the most commonly used, right? So if you can keep it simple and you know that a lot of other people are also using the same indicators as you can start to gauge that psychology behind the movement a little bit.
yeah, and indicators are kind of self-fulfilling, right? Because people believe into 200 SMA is why it works, right? There's no
Exactly.
other reason.
Yeah, exactly that.
So that's another interesting difference I noticed between people who are experienced in trading and those who are new to it is experienced traders don't try to outsmart the rest of the market, right? Like new traders are like, I'm going to use the 26 period SMA because everyone's using the 20 and I want to use something different.
Yeah,
And
no,
people like you are like, I want to use what everyone else is using.
exactly. I mean, like I said, so when I'm analyzing these charts, you have to accept that it's actually just human nature you're analyzing. So everyone else is seeing the same trends as you. Everyone else is seeing the candles form or the chart move a certain way. If you use the indicators that everyone's using, you set them up the same way everyone else is using them. That's an advantage to you. You need to know how to read them. You need to know how to understand them, and you need to keep it simple 100%. You can't clog it up. Too much noise you
No,
don't understand.
you end up paralyzing yourself with too much analysis and not being able to make a decision.
100%.
So, Blamey, you run a trading Discord called King Street. Maybe tell us a little about it for those who aren't familiar.
Yeah, absolutely. Well, King Street, we started that back in May 2020. So it's been open for a year, and I started it with a close friend of mine who's been trading for nearly a decade himself. Um, first it started off as just a small community just to help each other out, but eventually we met so many talented people on there and we built a bigger team. So now we even have a developer, we have custom bots, options flow, dark pool analytics. We have algorithmic alerts. A lot of the time our team is doing option scalps, and I'm not as involved on the individual tickers that they scalp every day. But I know that that's because I'm trading SPY. So I alert my SPY trades every day in those chats. And really, a lot of it is alerts. But what we want to do is help our members learn, how to actually kind of, if they are swing trading, how they can capitalize doing that even now, if they're looking to swing, probably scale back those profit targets in this current market, stuff like that. We have private help chats on demand. So we're really catering for the members, and we're always adding to it. So I should probably mention that we have a premium subscription. So there's the Royal membership, and that comes with all the bot features and my alerts and my weekly watch list where I post, technical trades with small scale price targets based on the chart and option contracts to utilize those movements. Otherwise, we have monster calls actually and a few other people, radio silent play, helping us with the public section of the Discord as well.
I'm just curious, why do you primarily focus on SPY, just one asset versus because like if you're like me, you trade literally anything. I don't care.
Yeah.
But a lot of good traders just focus on one or two tickers. Why is that?
Well, again, a lot of what I'm trading is even though it's technical analysis, I always come to the conclusion that it's human nature what I'm trading. And if I can recognize one stock's patterns and how it behaves, with certain trends, if it always reacts with, rising wedges, or if it constantly is forming broadening wedges and it respects these trend lines and patterns, you look at this every single day, you trade it every single day, and you can really understand and plan for every movement and every setup that you see. You can really capitalize and get to know how you should be trading it. So like with SPY, for me, the more and more I do it, the better I am at executing those trades. So now that I have a lot of practice with it, even if it's trading in a tight range of consolidation of 30 cents, I can still be flipping, candle scalps for 10, 15% profit on 0 days to expiry, just while it is stuck in a tight range, So again, like patterns, history always repeats itself. So if you can learn how one particular stocks behave, I mean, that's an advantage to you, I think. There's a ton of opportunity that I miss every day on other stocks and other tickers, but again, I try to keep emotion out of the game for me. And if I see other stocks running, other opportunities going that day, it's fine, because I know I'm about to capitalize on a 20% trade on SPY, or I'm going to compound my small profits and maybe hold some free contracts for a big move. I can plan for that every day. And that's a much more consistent way for me to rely on making money for myself than just looking elsewhere every day.
I love that. I also love that you're not afraid to take small profits frequently. I think one way that a lot of people get blown up is by, swinging for the fences every time.
100%.
Right.
Yeah.
Yeah. You mentioned 0 day to expiry. And I'm running out of time, so it's going to be one of the last questions. But tell us a little about that, because I think that's a popular term right now. You see it a lot on FinTwits, and I don't think a lot of people understand that very well, or why you should, why one would want to trade that.
Yeah. Okay. Absolutely. So with SPY, or with any option contracts expire at a certain date, and the closer you get to that date, the greater these fluctuations are that are caused by the stock movement every day. So with SPY, we have 5 days in a week. It goes same day expiry, or 0 days to expiry contracts, then next day. Now, there's a drastic difference if you're trading 0 day and next day expiry with these movements. For SPY, 0 day is extremely risky. If you're stuck in consolidation, theta, these Greeks in the contracts that people don't really understand, but they're very amplified on same day expiry contracts because the premiums are so cheap. At the end of the day, they're going to be absolutely worthless if you don't sell them. But if you are constantly actively trading, these 10-cent moves are very small fractional percentage moves will give you a very big range of movement on your contract for that day. So that's why I use those, because even if it's consolidating in like a very tight range, one candle that moves 10 cents is going to make you on a 0 day to expiry contract. If you're playing it the right direction, it can make you 5, 20%, you know, very quickly. So you just have to have your sells ready. You have to know that you're going to have to take that profit, or if it goes against you, you have to take the loss very fast, because it's also, you know, works the opposite way. If it goes against you, it's immediately can be negative 20%, negative 30%. So you have to play it very cautiously, but it can really reap benefits, especially if you are scaling back your profit targets and you're only looking to compound small gains. It's a very good way to do that.
Nobody becomes an investor in a 0 day contract.
No, you can't. You cannot do that.
Very cool. All right, we're running out of time, so I've got to move on to my last question. And I ask a lot of people this question, and I think a lot of people like to hear the answers to this. Let's say you meet somebody tomorrow who's brand new to this and wants to get into trading. What advice would you give them?
Yeah, that is a really great question. And, you know, I think we touched on a lot of it. But if I can, so something that I say very often to novice traders is the best way to make money is to not lose money. So what you want to do when you're just starting out trading is you want to make sure that you have an understanding of every trade that you go into. So you can always lose, you know, you can lose your full investment. So you just want to make sure that you're mitigating your risk. Your risk always has to come first. So you need to set your stops, or at least you need to know where you're getting out of that trade. You need to know where it's going against you. And then, you know, that also comes with everything else we touched on with the technical analysis. But everything that you look at when you're trading, whether it's fundamental analysis or technical analysis, it's all only a tool for you to cover your risk first. That's all it is. So think about your risk before you think about the reward in a trade. That would be my advice. It's really simple, but I think it's the most important.
It's good advice. A lot of very good traders I've heard give the same exact advice. Think about what you can lose, not what you can gain.
Yes, exactly that.
So, well, very cool. Thank you for being here, Blamey. For those watching, we're going to put a link to King Street, the Discord, and also Blamey's Twitter in the description below. Be sure to check it out. You can learn a lot from them. And Blamey, thank you for being here. I hope you'll come on again one day.
Absolutely. Thank you so much for having me. It was great to chat. I hope it's helpful for some of you guys who joined, and I will catch you guys around.
Thank you again.
Alrighty, let's look at some broad market charts into the week ahead, starting with SPY. And a couple different things on SPY. One, you can see here that on Thursday, we bounced almost perfectly off this anchored VWAP from the May 19th low. So that's definitely something to remember. Whenever you're looking at these kind of gap downs and just a kind of a flush, always anchor the VWAP from that swing low. And almost every time you're at least going to respect that area short term, maybe not long term, you can break down through it. But this was a great example of that on Thursday. Now, another thing on the weekly side of things, you can see here that if we anchored the volume by price from the COVID lows, you can see this secondary shelf forming. So we have been trading within a very tight range now for about 2 months. And so this has really shown a lot of volume aggregating here, shown by this highlighted green area. And if we do continue up, you know, we could make it all the way up to this next diagonal resistance line, which would be around 430, 435. Really depends on how long it takes. Remember, these diagonal lines are a function of time. So if we went straight up next week, it maybe be around 430. If it took us, let's say, 5-6 weeks, that could be closer to 440. So it really just depends how quickly we test this resistance above. And in that case, just, you know, always put your alerts on these areas above. Then you don't have to, you know, worry about, will it hit next week? Will it hit the week after? Just right click, create your alert, and you're all set up to go. Just make sure that you have your expiration maybe 60 to 90 days, and then you're good to go. You don't have to stare at the chart every day and see, when the price is going to hit this area. On the seasonality side, looking at the monthly seasonality since 2016, we had mentioned that the whole summer is a very strong seasonal time of the year for the stock market. And you can see here that we have had a pretty strong month already for June. One thing that I'll mention as well, and this was pretty much the case across the board on Thursday, but you can see that we gapped down and we actually closed red on Thursday, but notice that we had this green raindrop. So anytime you have that discrepancy where you have a red candle, but you have a green raindrop, it's always worth noting. That would have been a nice thing to look at into the end of the day yesterday. We had a really strong gap up on Friday. So going into the Qs, we kind of have this really interesting ascending triangle forming here on the weekly side of things. So you can see here that we are starting to kind of coil up a little bit. On the daily side of things, you can see here that we do have a pretty big broadening formation. If we anchor the volume by price from the March lows here, you'll see here that we finally got through this area of supply. And then if we do continue up, definitely watch this gap above, this volume gap, not a price gap, pretty much until you get to around 337, 338, all the way up to around 340. So if we do move up strong next week, watch this to be the next break-even supply zone. If we get through that, then it's kind of smooth sailing above, especially if we get this breakout on the weekly ascending triangle. June is not as strong for the Qs as it is SPY, but still pretty strong. You can see July has the 100% win rate. So it's interesting to see that we do have this ascending triangle forming into July with a really strong historical seasonality. Going into IWM, the small cap side of things, it's about time this price action finally broke. So one thing on the daily side of things to keep in mind, we are right at this symmetrical triangle resistance here. If we turn off the volume by price, you'll be able to see that a little better. So we really need to get through this line. Now, one thing that is something to consider is we do have a lot of time until we kind of get to the apex of the symmetrical triangle. We could chop around for literally another 2 months and still stay within this pattern. Now, on the longer term side of things, you can see here, if I make this line a little thinner, you'll see that we are getting pretty close to breaking out. Now, this is the same line. So, we did poke above it a little bit, but I mean, we are getting really close. And if we delete all of this and just focus on the anchored volume by price, if you remember from these previous videos, we were talking about this area acting as supply. Well, finally, we got to close above this area, and this will definitely be possibly a telling sign into the coming weeks that we're finally starting to break out into kind of blue skies above. You don't have a lot of volume above as we hit new all-time highs. This is where you'd want to maybe start using some fib levels. Same thing for the seasonality on IWM. Very strong time of the year going into July. June is also a very strong time of the year. So seasonality is definitely on our side if you are on the bullish side of things. Now going into the metals, we'll look at SLV real quick. SLV has just been respecting the VWAP from the late March lows almost perfectly here. So once again on Thursday, we had a nice bounce, gap up on Friday. Now on the weekly side of things, we've got this ascending triangle also forming here. It's a very loose ascending triangle. Notice here how I've got this zone highlighted rather than just, we've got multiple points. And that's the thing. Sometimes technical analysis is not going to be perfect. And that's something to always remember. Oh, that's not a perfect ascending triangle. Well, it doesn't have to be. I mean, the textbook, yes, says, there's specific patterns that have exact setups. But a lot of the time, if you kind of see something loosely, this could easily kind of continue up and be an ascending triangle breakout here. So let's see what happens. Not the greatest seasonality here. I guess when you compare it to the last couple of tickers that we looked at, 50% for July. Now for June, going into July, we do have, once again, very high win rate. So July could see some fireworks and not just with the 4th of July. Going into GLD, GLD is one that did break out over the last couple of weeks. You can see here in mid-May, we finally broke out. We continued up last week, and then this week, kind of a weird outside bar. Now, on the daily side of things, we have a pretty perfect channel here, just upward channel. And if you are maybe long on GLD, then set an alert on both sides and let the price action do its thing. You don't have to stare at the chart all day, but the alert system will allow you to still, look at the chart without having to actually stare at it all day. You set your alert on the bottom, the top, and if you break down, maybe that's your stop loss. If you break to the upside, maybe that's your add or you take some profit. But definitely use the alerts on TrendSpider. That is how you're going to save yourself a lot of time, especially if you don't have time to sit in front of the screen all day. Same thing here, July, pretty strong seasonality with an 80%. So, is June the time to buy into strong seasonality into July? That's up to you to decide as a trader, but definitely some things pointing to possibly a strong month ahead. Next one is VIX. The VIX is one that not a lot going on here. Absolutely just got creamed on Friday. We still do have this higher low here for now. One thing though that I'll mention, if you do look at the day of the week seasonality since the start of the year, Friday definitely has the worst seasonality with a 24% win rate. So that was right in line with just the horrible price action here for Friday. And notice just as we progress throughout the week, seasonality is just brutal. Monday has a decent win rate actually with a 68% win rate versus Friday's close. So, is the VIX something you buy into weakness on Friday and then sell into strength on Monday through puts or however you play the VIX? Maybe that's a strategy for some people, but all in all, you can see here that just the VIX does melt throughout the week as far as historical seasonality goes. Now let's look at some crypto before we move on. BTC USD, just looking at Bitcoin. One thing that I'll point out here is if you anchor the volume by price from the all-time highs, you'll see here that we do have a nice volume shelf forming here. You can see here that we are bouncing off of it. Remember, we do these on Friday. So, by Sunday, we could see something very different. However, for now on Friday, we are holding this volume shelf. And if you turn on the relative volume, this is something that's pretty interesting here. We did have a little pop from the lows on May 29th at 33K all the way up to around 39K. But if you're using the relative volume indicator, notice what's happening here is you can see this goes to red. So as we were moving up, we were actually moving up on below average volume. So anytime you have this red shaded area, that means that the price is moving up on below average volume. In this case, it's the 50-day average volume. And then on the weekly side of things, you can see here that the September lows is where you want to anchor the VWAP. And we're pretty much respecting this almost perfectly. Remember, with crypto, it's so volatile. You're never going to have a level. And this is with anything you trade. I mean, there's never going to be a level that's absolutely perfect. And so you can see the price is kind of trading around this anchored VWAP, almost like a line of best fit. But for now, it is holding, and we'll have to see if this volume shelf holds, or we've got something like this forming where you've got kind of this bearish pennant here. So you've got this, you've got that, very rough kind of sketch here, but you can kind of see this. You've got your initial move down, you've got a pennant. So the next move down could be kind of that same measured move that we saw from 59 all the way down to 30K. That would be a huge move to the downside, but anything is possible with crypto, as we've seen. And what could also happen, we could absolutely skyrocket to 50K. This is where technical analysis comes in. You just have your levels, and then you react as price action evolves. So Bitcoin definitely holding the anchored VWAP from the September lows for now. Let's go into Ethereum. Ethereum actually had a decent week. ETHUSD, Coinbase. The weekly candle looks pretty decent here. One thing that I'll mention, if you anchor the volume by price from this high, we're pretty much trading right at the point of control. You almost have this weird kind of like symmetrical triangle, ascending triangle type thing forming here, with the anchored VWAP being your resistance and then your trend line being support here. But same thing, we got this little bounce on below average volume. You can see it going red here. But all in all, I mean, on the weekly side of things, this is still very much in an uptrend. And so until it kind of breaks this trend line here. And remember, this is a function of time. If we went straight down next week, watch for around maybe 1500. But then if we did something like this, then it would be closer to like 2400. So remember, as time evolves, or as time goes by, these levels can be very different if you're using diagonal trend lines and that type of thing. So just remember that you can't really say, oh yeah, support's below at 1600. If we tanked next week, support would be maybe below, to be proven as support below maybe around 1550. But if this took 2 months, if we pretty much just chopped around literally for the next 3 months, our support would be at 2600. So that's kind of how you can look at this. It just depends on how long it takes for this to test support, or we go up and test the highs. We'll have to see. But remember, crypto in general, if we're looking at the month of the year seasonality since the 2017 highs, not a great time of the year for crypto with these lower win rates. But that doesn't necessarily mean it can't do its own thing to the upside. But for now, these are the levels that you want to watch. So hopefully this was helpful, looking at the broad markets, both on the stock side of things with these broad market ETFs, as well as Bitcoin and Ethereum, which are definitely the leaders in crypto. And let's move on to the next segment. Alrighty, let's look at some individual names on the watch list today. We have special guest Tanner, aka ChartingOptions on Twitter. Tanner, what's looking good right now? What are you looking at into the weeks and months ahead?
Well, first of all, thanks for having me, Jake. It's always a pleasure to get invited on to do this with you. So, but I mean, right now, hot topic I think we have to completely talk about is oil. So one of the biggest things I'm focusing on, and I guess as a group at ChartingOptions, we've been kind of paying attention to the last couple months. And right now, oil just broke to 52-week highs yesterday, followed through today, and everything's following suit with it. So there's one ETF in particular. Is my screen sharing?
Yep.
Yeah. So right here, in particular, we've been following OIH quite a bit, which is Van Ecker's Oil Services, which focuses more on oil-based stocks. So things like SLB, HAL, RIG, which are all breaking all-time highs or breaking big bases out of previous resistance over high timeframes. This in particular this week has made quite a big move, as you can see. I'll zoom in a little bit. Well, first, I guess we'll talk about this downtrend that it broke. This is about from the July-June high of 2018 to about the beginning of this year. It broke a 2.5-year downtrend, retested, which is beautiful, and now it's made its move higher. And then as of this week, really the last 2 days, it's cleared 52-week highs, really beyond that, dating back to early 2020. One of the big things, I guess, really in here, as it cleared, so let's say 3 or 4 weeks ago, it cleared the 10 SMA, which is something that I really pay attention to, and then started flagging a bit. As a group, we put on some October calls, some October 250 calls, I think when the price was at like 211. That was just a week or so ago. And now as of close today, we're sitting at 243. So those calls are almost in the money already. And really, it's all based off of inflation, or at least, so let me take that back. So from an economic standpoint, oil is rising. A lot of it is due to the inflationary worries. And so long as oil's drum beats, so too will OIH. And as you can see, there's a lot of runway here if it wants to make it. Oil is kind of coming into a key resistance spot, which would be like 5-year resistance if it makes it to about 75. It's sitting at like 68, 69 right now. And at that point, I think there totally could be some tempers cooled a little bit, maybe some consolidation at that point. But right now, I'm really, really bullish on energy as a whole, but specifically oil and gas into the summer and the remainder of 2021.
That makes sense to me. That's a beautiful breakout. That's for sure.
Without a doubt. And you love to see this retest too, of the trend line.
Absolutely. And that's the weekly candle, right?
Yes, correct. Yeah, this is the weekly chart. Yeah, so this was a longer time frame swing. So this was kind of the main prominent focus, was paying attention to a higher time frame. We looked at the monthly as well, but I thought the weekly would be good to present today. So yeah, so as long as oil drum beats, you can apply this to XOP as well if you want to capture another ETF that follows oil. That chart I'm sure looks similar, and it does. Yeah, so this is one ETF I'm paying attention to, just to kind of give like broad ideas. Another one is IDRV, which this has which, as you can see, this is the weekly. So it's been quite parabolic since the COVID capitulation. So we'll narrow this down a little bit because it really doesn't have a lot of time. It's a fairly new ETF. But as you can see, this broke out this week as well. So IDRV is an ETF that follows electric vehicle and autonomous technology. So things that it captures are like Google, NVIDIA's in this, NIO, Tesla, Ford's in this, GM is in this, which Ford and GM are both breaking out. Ford just had a massive breakout last month. All of those it captures. I think Intel is even in this. So any sort of semiconductor you can think of for chips, and then at the same time, automotive makers as well, and then Tesla, which is essentially an EV ETF in itself. But as you can see, we broke 52-week highs. What was this, Tuesday? Yeah. And I mean, maybe we'll retest this base again, but this is what has been a base for all of 2021. So about almost half a year, 6 months, 5 to 6 months of basing, and a little bit of a VCP going on here, which you like to see, creating higher lows as it contracts and tests this 48 level. So through here, I think this really has a lot of room to run, especially if, as most of us assume, or are at least bullish on the EV sector itself. I think this is a really good play to capture that. And it did come off quite a bit of a run, so it was nice to see it consolidate in the way it did. So I'm looking for this to push higher, so long as all the holdings do as well.
Yeah, it looks beautiful. Nice breakout. Multi-month breakout.
Yeah, I just realized I just had the SMA on there. So let me just throw on the Ripster cloud, on the MA cloud, and just shout out to the active sequence, which is something we pay attention to. So when this flips green, this is what we consider a bullish active sequence. And a lot of people have seen the hashtag ActSeek. So essentially flipping green is a buy signal to be long, and then flipping red is what is a bearish active sequence to flip red. So right now we're in a really nice bullish active sequence, both in climbing. So
beautiful
for sure.
What do we have next up on the list?
So let's just take a peek at an individual stock that is, for me, on quite a bit of what I would consider do or die, and do or die really for the market. I mean, Apple. So basically, Apple's been pretty much a headwind for I mean, since the March lows. I mean, it gave us a little bit of a bounce, but didn't give much. And since then, it's really formed what is vivid, a clear head and shoulders pattern here off this trend line. So this trend line comes back from the gap up last year. And this, I'm pretty sure this was the split news. So this was the split announcement. Obviously, it went parabolic. We came back down after the split itself. And since then, it's followed this trend line from this second low of the gap. And now this is something that we talk about a lot at Charting Options, is following gaps. And in this instance, and in a lot of instances, the second low that it creates off the gap, you can usually use that as a trend line to follow through. So you can see that in the example here. I mean, we're on a big spot and potentially, as of today, losing it. Let's see if I can get the 200 SMA to load.
It's the anchored VWAP from the gap.
So this is the exactly. Yeah. So this is the anchored VWAP from the gap. And then this is the 200 SMA, which this is, I mean, Amazon as of today is below the 200 SMA. Tesla is below the 200 SMA. So there are several mega caps that are below the 200 SMA. And as of today, Apple lost the 200 SMA. So this will be very interesting to see what happens here to close out, I guess, this very early part of June. Do we test this anchored VWAP? Is this a shakeout candle below the trend line and below the 200 SMA, and do we just rip higher? Regardless, I think this will really set the scene for kind of how summer is going to go from a SPY perspective and even a Q perspective. Apple is so important to both obviously to the S&P in general, the index in general, but I think really could have a lot of cards here. So as of right now, I have started a long position attempting to play this trend line, but I will quickly, it's a small position and I will quickly flip short if need be. I'm curious to see if they shook the tree today, because as you can see in March, they did the same thing and then we gapped up and ripped higher. So we'll see. But yeah, this is something I'm really focusing on. So another, I guess, popular name recently is Coin. This is kind of something we've been paying attention to as a group at ChartingOptions since kind of the fallout from Bitcoin and crypto in general that happened a few weeks ago. But basically, it kind of aligns with what we were just talking about with Apple and following gaps. Coin right now has two gaps that it can't fill, or excuse me, it hasn't been able to fill. So there's a big gap here from the gap down in mid-May, which I'm pretty sure was around when crypto essentially had a capitulation. And then there's a gap down from last week that it tried to fill early this week and still cannot. So long as these two gaps remain unfilled, Coin's going to go lower. It's just inevitable. It's just the way it is. And as you can see today, it lost a big key line of support. The low of the week was essentially today's close. And I wouldn't doubt it now if it comes back down and revisits 230, maybe even 220, 225 from this point. So regardless if crypto is looking a little bit better than it has, which it certainly has in ways, Coin still looks really weak. And until these two gaps can get filled, it's going lower. Okay, so another chart kind of follows suit when we're talking about gaps. I guess I'll just keep with the theme right now. Netflix. Let me pop off the EMA cloud. Netflix still has a huge looming gap from the ER gap down. What was that? That was end of April. And as you can see, this yellow line is the 200 SMA. When a FANG name like Amazon, we just looked at Apple, that's below the 200 SMA. Netflix below the 200 SMA. It's just not from like a trader standpoint. I really would like to see leaders lead, and when FANG is acting like this, though Facebook and Google look a lot better than these three charts do, it's just a bummer to see. So you can see we gapped we gapped down below the 200 SMA, tested the 200, couldn't get back above the 200, and from there we've fallen. And as of today, it was another weak day. So until we can get into this gap, which pretty much, I guess, let's call it about 520, Netflix is going to go lower. And if Netflix goes lower with Apple, with Amazon, it's going to be quite the headwind for the market in general. No matter how much rotation goes on, which they've done a great job. I've marveled over the rotation in 2021. It's going to be really hard if these names don't start picking it up. Yes, we'll go with doom and gloom one more. Tesla.
Doom and gloom.
I don't mean to sound super bearish, and I'm not entirely, but there's a lot of things going on that I don't like to see. And we could talk about meme stocks and the short squeeze saga that's happening right now too, 2.0. I don't, as a trader, I love that people are making money. That's awesome. That's the whole goal. But from just a macro standpoint, it's just not good for the market. So you can see this is a great example. Tesla had this gap up in November that we talked about. It created the second low in March. So from that point, we have a trend line we can now follow. It bounced off the trend line in March. And then when we got into May, early May, just a couple of weeks ago, it lost this trend line. That was your key to go short. So now it's lost the trend line from the gap up, and it's weak. Obviously, it got down below. I mean, there was a multiple day fallout, got down back below, created a higher low off of this low in March, but now has struggled with the 200 and with downtrend resistance from the actual April high. And as of today, it lost a big spot and closed near the lows, literally the lows of the week today. So Tesla continues to look weak and is now back below the 200 SMA. So that's what, 3 or 4 mega caps that are below the 200. Just crazy to think when we're so close to all-time highs across the board. Though things don't look very strong, we're still very close to all-time highs. To think these mega caps are this far down on their charts is pretty wild. So let's talk about one chart that a smaller cap that has higher short interest. I think the last time I checked, it had 14% short interest, and that's GoPro. I think GoPro looks really good. They had a conference with JP Morgan, I want to say a week ago. where a ton of companies presented, a ton of tech companies presented, and they came. JP Morgan came out and actually specifically addressed GoPro. I don't know the full contents of how they felt, but they definitely came away positive from GoPro. So GoPro sparked an active sequence off of that. Yeah, that was actually on May 24th. So right here, there was this pretty big candle, and if I turn the volume on, I'm pretty sure some good volume came in on that day. Yeah, you can see some right here. Some decent volume came in above average, the 20-day average, sparked what we consider an active sequence, and now it's flagging below this downtrend resistance. I'm looking for this to push higher, and if it pushes higher through 12, we can look on the weekly time frame. It's got some room to run. So you can see it's a really nice bull flag on the weekly as well. And I mean, obviously far-fetched to think we're going to get anywhere up in here, but it has room to at least this year's high, which is 14 through this bull flag, and then potentially up to $16 if this breaks to the upside. So we can see, let me turn off the Ripster cloud real quick. You can see the 10-week is right now, it's trying to reclaim it. So it's battling with this. So a reclaim and a break of this downtrend resistance, I think will do really positive for GoPro. And like I said, there's some short interest. So there could be some squeezing going on too. Okay, another break.
Beautiful. I think we've got time for a quick 30-second, 45-second final chart there, and I think that will be out of time. But no, this is great.
Cool. I just want to look at GE real quick. GE was really, really good to us, and it's breaking out. I mean, obviously, this is a cyclical name, industrial name that is breaking huge downtrend resistance. This is 5 years of downtrend resistance. It created a beautiful pennant off of this year, and it broke out last week. And it's looking to push higher through, what is this, the 14.5 level. So through 14.5, you could easily see 16, 17. And I think there's nothing better than looking at a huge downtrend break, some retest and consolidation, and then a break higher out of a pennant. So I think General Electric is going higher.
Oh, I agree. I love the monthly chart on that one. So
yes, it's awesome for sure. Ford as well. What a breakout with Ford last month.
Definitely some names keeping the market up when tech isn't doing so. So Tanner, thank you so much for joining us and going over all these charts. Make sure to follow Tanner on Twitter at ChartingOptions, right? Is that the actual handle?
Yep, you got me.
Okay, because sometimes on Twitter, it's like the name and then the handle is something different and then you can't find the person. So at ChartingOptions, that's where you can find Tanner. And Tanner, thank you so much for going over these charts, and looking forward to the next one soon.
Thanks for having me, guys.
Alrighty, let's look at some individual names into the week ahead, starting with NEO. NEO is finally starting to get some attention again, kind of becoming popular. Definitely one of the most requested stocks this week. Really kind of basic stuff here. I mean, we really need to clear this resistance line, and this is almost a horizontal line. So, you know, right around this 43 area, I think if it cleared that would get interesting. On the weekly side of things, we did have that breakout in the previous week. So this week we had nice continuation. And really, if we do break this 43 area, you'd want to anchor a VWAP from this high. And if we do continue up, watch for that 45 area. Remember, you can always just create an alert around that zone using the dynamic alerts with sensitivity. And yeah, that's kind of the main thing to watch. A break of 43 and then a test possibly of this anchored VWAP right around, let's say 45.40 for now. And we'll see how long that takes to possibly test that above. Going into the next one, we have Fubo, another one that's getting some attention, had some pretty strong moves over the last couple of weeks at this point. After earnings, that was pretty much your bottom. Fubo's one that does have some anchored VWAPs that it's trying to get through. What I did was I anchored the VWAP from this high on January 27th, and then I anchored another VWAP from the secondary high. And you can see here that we did break above and tested perfectly on Friday, kind of holding this area. So if we do bounce off this zone, the next area to watch would be this high here on the 27th with the VWAP right around 29.75 to $30. Remember, you don't always want to have an exact to the cent target. I generally like to use zones. $29.75 to $30 is kind of what I'm looking at. Now we do have a gap above as well. That's another thing to look at. Remember, if you are looking for gaps in price, you can always just turn on the gap snake. You can see here that it will highlight that area very quickly. So whenever I'm looking at a stock, maybe I'm not too familiar with, I always turn on the gap snake just to see if there's any random gaps that I'm not missing, because sometimes it is hard to see a gap, especially if you have price action before that kind of right in that gap. So sometimes you can't see it that well. Like this one, right? We had this candle here on March 1st kind of is right in this gap where we gapped down from March 3rd. So this one was kind of hard to see. And so you can see though that we do have that gap above. So if we clear this, the next target would definitely be that gap above around 39. Definitely seems like these growth names are starting to catch a bid. Going into the next one, Tesla. Tesla held on the weekly side of things. So you can see here we've got the symmetrical triangle set up here. Didn't test this lower trend line perfectly, but a nice bounce. Still have a higher low from the middle of May candle low here. And then on the daily side of things, I was going to mention here, seasonality is something that works really well for Tesla. So if you look at the day of the week seasonality, looking at the 2016 low here, that was pretty much when we started to make some traction in Tesla, and really the market in general. Is the beginning of 2016 is pretty much when we bottomed and really started to make new highs. On the daily side of things, you have a gap above that would fill right around 732. You have a gap below that would fill right around 565 or so, 565, 566. And then on top of that, you know, we did mention that since 2016, and let's exclude 2021. So you can see here an 80% win rate over the last 5 years. If 2021 closed red, this win rate would go to 67%, but we still have plenty of time left in the month of June until this makes its monthly close. But all in all, I did want to show the day of the week seasonality as well. Looking back since the beginning of this year, notice Thursday has the weakest seasonality with only a 36% win rate. Very sharp move down on Thursday. But then you can see on Friday, we have a pretty decent uptick in the win rate. And that was right in line with what we did see on Friday. So seasonality is definitely one you want to keep an eye on with Tesla when you are trading this. Next one is Baba. Baba is one that is just such a gappy stock. I mean, you turn on the gap snake and you can see this thing just constantly is gapping. You do have a gap below around 214.60 or so, but you also do have a gap above around 263. Now, one thing that I'll mention here on the daily side of things, you got this symmetrical triangle, just create an alert on both sides. In this case, maybe you only want to know when the price breaks through this resistance. Make this resistance expires in maybe, let's say, 6 days. You don't have a lot of time before the price is going to have to move through that apex. Create the alert. So what I mean by that is notice how we're getting close to the apex, right? We only have about 4 or 5 days until the price is going to break through resistance or support. So that's why I don't have the expiration much longer than 6 days, because it's going to break one of these within the next pretty much 5 days. Same thing here, just create an alert on the lower trend line here. Just for a breakthrough, because you only want to know when the price actually breaks through. Maybe you're a trader that's just looking for price action breakout or breakdown, not necessarily testing these levels. Same thing, support expires in about 6 days, create the alert. Now you're set up. Whenever the price breaks to the upside or the downside, you'll get the alert through your phone, and then you're all set to go. Now, on the weekly side of things, one thing I'll mention here is the fact that we do have this breakdown. We are using log scale. So if you are looking at this trend line on linear scale, you may not see it as clearly, but we did break down at least on log scale using wick to wick here. And so if we do move to the upside, watch this previous support act as potential resistance above around 230 to around, let's say, 235, depending on how long it took to move to the upside. So definitely keep that in mind on BABA for the weekly side of things. And day of the week seasonality, you can see Tuesday is definitely the best trading day of the week, at least for bulls, with a 59% win rate versus Monday's close. So the last one we'll look over is NNBM, another very popular name a lot of people have been talking about. First things first, if you look at this breakout here on Friday, Notice that we closed right at this resistance, but we have this wick above resistance. Now, if you turn on the raindrop, you'll see something interesting. You'll see quite a bit of volume actually within this wick. So that's something I like to look for whenever you have a wick, especially one that is over 50% of the candle, at least on Friday's candle here. And if we did continue up, we do have this anchored VWAP from the swing high here back in February on February 10th. So that would be around, let's say, 9:15 or so. And if we do look at the volume by price from the COVID lows, you'll see that we have a nice volume shelf forming here. If we anchor from this point here, you'll see that, we did bounce. We did get through this, what was supply initially, but you can see we closed right above it. So I would call this kind of a break-even demand zone here and possibly a little bit of a launch pad for price into the coming weeks. And you can see here the day of the week seasonality. Thursday is definitely the worst performing day with a 32% win rate. Tuesday, once again, 64% win rate, which is the highest day of the week so far in 2021. So that is all we have for the chart requests. One thing that I wanted to mention, if you are using TrendSpider or you're not using TrendSpider yet, you want to find a tool that allows you to find setups looking at the conditions that you're looking at. Make sure to use our market scanner over the weekend. This is something that allows you to search for literally anything you can think of. So whether it's a candlestick pattern you're looking for on the weekly. So if we did something, maybe you're looking for bullish engulfing candles into next week. I'm just going to name this bullish engulfing. You can scan through a watch list you've already created. I'm just going to scan through the S&P 500 and extended hours. You can also scan through. That's not something you need to worry too much about if you're scanning a weekly chart. The current candle is something you want to use when you're scanning intra-week. Maybe you're looking for a bullish engulfing that's forming into Friday's close. You'd want to use that current candle, but since it's the weekend, you don't need to use the current candle. So add parameter condition. We just go to weekly candlestick pattern. Just type in bull and engulfing bullish will pop up. And then you go scan the S&P 500 for some of these bullish engulfing setups that we have on the S&P. Now you can see here, there's only 2 weekly bullish engulfing candle setups here. So if we make this one chart and click on, let's say, FFIV, you can see here on the weekly that we do have a nice bullish engulfing candle going into next week. In tap, another one, very strong bullish engulfing candle going into next week with higher volume. So that's something to keep in mind. But remember, you can search for anything, whether it's bullish engulfing candles, whether it's the RSI breaking above 50. You can scan these things to whatever conditions that you're looking for. So hopefully that was helpful understanding how you can use the scanner, and hopefully these chart requests were helpful looking at some plays possibly for you into next week. And remember, if you do enjoy these stock trading pit episodes and these seasons that we put on, definitely like and subscribe, and we'll tune in with you guys next Sunday. If you have any questions at all, always reach out to our customer success team or our Twitter DMs. They're always open. And everyone have a great rest of the night and happy trading into next week.